What is going on, guys? What is going on? So you know what, people have commented that, you know what, we love the SMC videos, but can you please mix it with a bit of price action? You know what, guys, I got you. Let's get right into it. Okay, so you want to start with your top-down analysis. Okay, so top-down analysis is when you predict price from the higher time frame to the lower time frame, which is from your monthly till your lower time frame, which is 5 minutes. At this instance, we'll be using daily till the 5 minute. Okay, so as I know, most of us that trade price action, we would look at the trend. We are looking at a nice high, a nice low. Let's just start there. Okay, nice high and nice low, right there. Yeah. So first of all, that nice high and that nice low for an uptrend, it's a V. Okay, it's a V, which is going back to the smart money concept. The V is the buying model. So what that means is when we've had the first leg, we need a second leg. Whatever price does, price always needs to balance itself. Okay, price just does not move like that. All right, price, if there was a first leg, there should be a second leg down. Okay, that is when people start to calling it what? A lower high or higher high to a higher low. Okay, which will be something like this. Okay, so from this first leg to the second leg, right? So when we have a second leg, we need a what? A third leg. So we have to push back down, okay? Then we have to push back up for another leg, okay? That is market structure. The difference is we don't, in smart money, we don't use it fully, right? Because we don't care about the trend, we care about price, we care about the time, okay? So in this instance, the first leg needs to be filled with what? The second leg, which is the left, the right move, okay? So what you need to understand is when price was pushing up, in order for price to come down, it needs to reject, come back up, and then come back down, right? When price rejects and comes back down to fill the leg, it left 3 candles on your left, which is the candle that they will mitigate, okay, to close the orders. That would be your retest, okay? That would be your retest. Let me tell you this. That would be your retest. So what I said to you is a first leg, which is an uptrend. And when we have an uptrend, we always expect price to push back down to give us a downtrend, right? So price needs to balance itself. It does not just push all the way up. It needs to balance itself. So when it was pushing up, it left orders. So most of us that still trade price action, we are looking at higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows, right? But when we were forming the higher highs, higher lows, there were orders that were not filled. So there are orders that are open on that uptrend. Okay, so when we sell, we are trying to close orders that were formed by the buyers. That is why we said what's happening on the left is going to happen on the right. Okay, what's happening on the right is going to happen on the left, so forth. So you need to understand the 2 legs. That's all you need to understand, which is that push and a push down. That's all we work with in smart money, nothing else. Okay, so when you bring it to price, to real price, is the first trend, then the closing of the trend would be the downtrend. Now, how do we close those orders? How do we close those orders? So if we are seeing this push, this is the first push, okay? This is the first push. When the first push happened, okay, they left a candle that introduced us to this push to the downside. So this candle have sponsored the whole push, okay? So we need the market to come and close this candle, which is the order block. Okay, it is an order block because this last candle has sponsored this whole entire move. Okay, so the reason why people know it's time to sell or it's time to buy in an order block, because there is an order that is closed there, therefore market will retrace there. Okay, fine. Now, this move, as it was introduced by that candle, it left what? That move right here. Okay, so this move was introduced, it left the last candle. So we use the last candle that was introduced by price. Okay, so that will be from our uptrend. So we see now we are working with two candles. We have this candle that introduced that push. We have this candle that introduced this push. Okay, so both of those candles are now open. That is why when market comes to that candle, it retraces back to the downside. Okay, so now when those two candles are open for us, okay? So now what happened when we had this nice push to the upside after we were sponsored by the other block? Now, most people would say, okay, we have, let me just delete this real quick. We have this level, okay? This is our plus push from structure, okay? From, if we're now putting price action, last push from structure. When we had a higher high, market needs to come down low. Therefore, we have this new low, okay? Then we have a new high. So most people will need now a retracement from that, from the new low. Now, when we have a new low, that is what we call the imbalance. Because now when price came, gave us a new high, pushed the candles up, came back down, left the imbalance, because now we need to have blue, black candles or white and black. So we need to have a balance. So therefore, your retracement would be there, right? So when structure did something like this, a nice push from the order block, came to that last, comes down like that. When it came down, pushed up, when it pushed up, this leg, going back to the leg that pushed you up is the leg that will give you the imbalance. That is where people will have a nice retracement, or they will have a nice entry, because they have waited for price to create that higher low. When it came higher high, when it created a higher low, then they will have a nice weight from the imbalance and push back up. Okay, let's move together. Right now we are pushing nicely to the upside. Okay, this is now the resistance. The resistance for most people is this whole from this whole high would be the resistance. Now, the resistance would be the order block, the level that have introduced us to this candle. So this whole move that was sponsored by that candle would be the order block. Therefore, we expect price to do what? to give us a next leg, which would be the push to the downside, to close all the orders from this side, you guys, okay? So how do we now know, for instance, the swing, the Judas swing, okay? So in this nice push, we had an imbalance, we have a nice push. The nice push to the upside will be the higher high, right? We're only working with 2 candles. The order block, which have sponsored by this move, this order block is that move, okay? This whole move, that's the order block right there. So what we want from price is when price gets there, it needs to react, okay? And that's what happened now. And a push up, retracement. So what is the retracement? And in smart money, it's the imbalance. So there is our imbalance. We would enter there. Now, want price to introduce another move, which is the higher high. The higher high, most of the time, especially when it's about to come to the order block, it does leave what they call the fair value gap. Okay, so when the market comes here, come back to the order block, it will leave those nice 3 candles, which is just a leg, you guys. It's just this leg. So in order for us to go back there, we'll have to come up, push down to the fair value gap, come back up. Okay, so every time there is a new high, there is an order. Let's just leave it like that. Every time there is a new high or a new low introduced by the market, there's an order left there. That is why it is called imbalance. That is why it's called a fair value gap. Okay, so there is a gap there. So what we call it in price action, that gap, as I said, it will be a retest. So nobody is expecting for market from the resistance, which is now the order block, to just aggressively push to the downside, unless if you're a swing trader, you will hold when the market is doing this funny things here, which is up, down, right? So when the market gets here, which is the leg of the high high, it leaves 3 candles, 1, 2, 3, to the order block. You would put your retest or your block or your box to show that it's a retest on the second candle. On the second candle, we're expecting a retest. Right? It sounds fancy when it's called a fair value gap, but it's actually a retest, right? As we know in the channel, we simplify things to make money. Okay, we don't care about the wording. We don't care about none of that. We just want to read price, understand price, and make money. Okay, so from the fair value gap, we're looking at the retest. From there, we know because there is an old high because of the order block, therefore we are expecting a Judas swing. Therefore, we expect price to come take us out, or those who are quick in the market to be taken out. So that would be our fair value gap, which is the retest. So when people talking about mitigation or people talking about fair value gap, it's a retest. It's a retest. So when market will come there, it will retest, give you that low, and come back up. Why? To close the orders that have sponsored that move. Now, this order is closed. The order block, okay, is now closed. We're expecting price to come to the downside. Come nicely to the downside, okay? Which is that. What is that? The resistance. What is the order block that sponsored this whole move? This is the order block that pushed that sponsored the whole move. Now, what is that? Support. Okay. Now, that's why you have to always use everything in your arsenal. You use everything that is there. If you have seen a push to the upside, you're already waiting for this area right here, which is the order block. If this was your prediction that the market will create higher highs and higher lows, you know that every time it creates a new low, it's an imbalance there for you. You will mark right here for those imbalance. And when you're seeing those nice 3 candles coming to the upside, we're expecting a retest on the second candle right there. And market did exactly that, came, retest, went up, and push us back down. Now, but all you need is really the order block, the fair value gap, the imbalance, and the other block void, which is the rejection. Okay, so we are very much understanding all of that now. So we want now from that first leg, what do we expect now? Push to the downside. To what? To close that leg. Okay. Now, the market did all that, had a retracement, which is the Judas swing. We had a push to the downside. In this instance, the push to the downside was very much aggressive. Now, when you see aggressive candle, price action traders, when you're seeing those big candles that push us to the downside, which have been, could be because of the news, or it could be because of a big event, all right? So you take your box, cut that candle in half, you guys. Just cut the big candle in half, because that will be the retracement, okay? That will be the retracement. If the candle is big, okay, you just cut it in half like that. And you can use the box. That's the half. Let's see, that's the half is right there. You can use the box, or you can use a ruler or Fibonacci to just cut the candle in half. Okay, because that candle was too excited, which is an imbalance. Okay, so back again. Now on the downside, we need a lower low, lower high, lower low, lower high, lower high, just like that. Now, when we have pushed here aggressively, okay, remember the order block still open, which is our support, and we have that nice imbalance over there as well. In this instance, the market was so excited that it did not leave us any clues or any time to get in. But if you know what you're doing, the aggressive push to the downside, okay, this is what I mean. The market did not do something like this: lower low, high, lower low, high, lower low, right? So therefore, you won't have any. You won't have, maybe if you're scared to get in or you're new to trading, you won't understand as to what to do. But remember the order block, the support, which is your order block, your support is still open. That's why every time the market push up, just be ready with your candle. That's the last candle that pushed the market up. That's the order block. The same as here, this is the last candle that pushed the market down. That's the order block. So here, this is the last candle that pushed us to the upside. Therefore, if you couldn't have a retracement here, it's okay, because the order block will do what? Will be filled, and then it will push back to the upside. Doing what? Fair value gap, which is a retest. So it will do what? It will come to the half of that candle. As you can see, it did. I know this is cherry picking, but you know what it is. So when it came there, let's say you missed this whole move, but now the order block is open. So those who are already used to the strategy, know how to trade it, they've been watching so many videos, they understand. They know that at this time, now that because there is an order here, if you can just wait a little bit, you can get a nice buy. But if you are not confident, you can just wait for a retracement to the half of the candle that pushed us to the downside. This aggressive candle is the one that is pushing us to the downside. And then you can have a nice sell off. Okay, you can have a nice sell off right there. Nice sell off right there. Okay, and then as you can see right there, that we have a nice, beautiful retracement to the downside. Now, you guys, let me tell you something. Everything works. Everything works. It does not matter who taught you. Everything works. All of us, we're just, just saying it in different ways. If your video was of help to you, please like, please subscribe. If you want me to explain a bit further or more, just comment down below and I will do so for you guys. Thank you so much for your support. Hope to see you again in the channel. Cheers.